So let's talk about swing trading versus day trading, or how you generally scale. I have quite strong opinions about that, to be honest, especially the smaller time frame you go. Let's start with your point of view. What do you think?
Yeah, I think a lot of the time you look at these, especially from a beginner's point of view, they put themselves into a box, like I'm a day trader, I'm a scalper, I'm a swinger, and whatever it may be. And excuse the pun. But basically,
Pun intended.
yeah, unintended apologies. But what happens is when they put themselves in this box, they're actually missing out on a lot of opportunity. What you really, in my opinion, I know it's the same with you, is you want to follow where the opportunity is. You don't want to just be classifying yourself as I'm a scalper, day trader, swing trader, because at the end of the day, all of those different styles have their cons and their pros. And they're all there for different purposes, different times, different market phases, etc. And I think that's a very big problem in the industry, that people will classify themselves as a type of trader, and actually ruins a lot of the potential opportunity available to them.
Yeah, I think actually that's even a wider psychological phenomenon. It's like that identity-based thinking. For example, I was speaking with someone the other day. He said, like, yeah, I'm just not a gym goer. I'm just not this. I'm like, so you
Yeah.
basically put an identity on yourself, which is self-made and in many shapes or forms uninformed, or at best, let's just say, ignorant to the real reality. And the same goes for trading as well. Now, that's why my approach of teaching an underlying process-based, data-based concept allows you to try different things out as you progress through your learnings and your epiphanies and understandings about yourself and the actual abilities that you have that may be uncovered also to some degree, right? They need to be uncovered. But that said, because a lot of people, let's just say there's a sort of an average that most people start with, and that's typically, from the retail space, people approach trading with an action, gambling, gaming type of way of looking at it, for lack of a better word. And
Yeah.
so that's why they're looking for signals. That's why they're looking for engagement, for activity, for doing something, right? And what they don't realize is that the more trades you make, the more you're already losing just by clicking open and close on your trade, because you're paying spreads and fees and slippages and all sorts of things. And so anything that encourages you to give to trade more for no real good reason is actually directly and immediately working against you. And let's not even talk about that executing a short time frame type of strategy comes with a lot of challenges psychologically, speed, execution quality. Very simply stated, if your target is 5 pips and you lose 2 pips on the execution, and then sometimes on, with a little bit of slippage and stuff, it might be even 3 pips, then half of your trade is already trade cost or more. And you may not even be aware of these things. And you wonder, especially if you train on demo, by the way, on demo, you will never have any sorts of slippages, and you will get a completely wrong picture versus the real market execution. So you think on demo, oh, things work out, and then you go into the real market, and what happens is that you lose. And then because the numbers aren't the same, the execution values aren't the same, the price isn't the same. And what happens also, especially when it comes to the topic of scaling, right? Scaling means bigger. And the bigger the lot size, the bigger the account that you trade, the more execution quality will be a problem. You cannot simply trade 100 lots in a simple forex pair at the same spread like 0.1 lots. For that, it's also good to understand what is a lot. I know it's very fundamental, but 1 lot is 100,000 of the base unit. So 10 lots is 1 million. 100 lots is 10 million. You think if someone buys or sells 10 million of euros or dollars, it doesn't, whoever is selling that is not going to price him differently. Again, brings us to the topic of risk management. This is what dealing desks do. Dealing desks make sure that they widen their spread to protect their own self. Another thing is you have something like top of the book, which essentially means that there's only a maximum quantity available at the lowest spreads at any one quote, basically, that's available on the price feed. So if you're looking to scale really big, then scalping brings all these challenges with it. Day trading depending again how you see it, like for example, we have our UTS system that we also trade here. It is essentially a day trading strategy. It could be carried over another day, but it's like intra-week for sure. It's not like I wouldn't say it qualifies as a swing trading strategy just yet. But here again, the targets are big enough because we're talking about 25, 50 pips that the execution is not going to impact materially your result if obviously the probabilities of your trade that hit the take profit and stop losses are in line.
Also, with scalping as well, people forget that with more opportunity and it comes more variables that you have to deal with in a quick amount of time, which is going to result in these things like anxiety, etc. When you have a lot of opportunity, you almost get this powerless, you can't essentially even execute correctly.
It's like the deer in the headlights, right? Basically.
Exactly, and at the end of the day, this is going to result in you actually needing more rules, more structure, more clarity around what you're looking for, because you need to actually be able to see, this is just movement, this is not opportunity, and having very clear rules and a very clear process for doing that. So you can actually get that feedback loop quick enough to be able to also execute on the opportunities that do make sense from a probability point of view.
Yeah, that might be the biggest challenge, actually, to differentiate signal from noise 100%. And that's why there are like two phases of successful trading. One is the preparation in terms of strategy development to make it all really work on paper, that the statistics are in place, that the rules are clear, and that it's measurable, quantifiable, that you can also see it as it unfolds. And then the other side is to put it into action, the more stress you will have putting it into action because the variables are too much, or the time you have to do things is so much quicker, and any of these things, it will impact the result or make it just like a lot more difficult to execute. Now, I'm not saying nobody can be successful with scalping. That's absolutely not true neither. However, it is a more difficult approach to starting with trading for sure.
Yes.
So, and because a lot of people start trading with very short-term type of approaches, is literally the opposite of what they should and could be doing in order to dive into the world of trading in a more successful way. They literally rob themselves of the ability to move out of gambling and into trading, is my opinion, at least.
Yeah. And like, I think there's also the argument as well that people would say when it comes to scalping, you're getting more action, let's say. So there's a feedback loop more to be able to say, gather information about yourself and things like this. For example, you might take, 100 trades in a month or two compared to, 2 or 3 in a swing trading strategy. But especially for beginners, if you're really looking for your first sign of structure and consistency, I think arguably it's fair enough in saying that more of a swing style is more suited. But even with that, you also have to understand the differences, for more of a swing approach, it's going to be much more about the trend and these fundamental aspects that are pushing us,
and the ability to be patient.
Exactly. And in a scalping scenario, it's going to be much more based off time and volume and positioning and things like this.
Yeah, a lot of people, I think, confuse the ability to scalp with just dopamine hits.
Yeah, it's like being at the casino and playing whatever machine is there. It's quick dopamine hits over and over again.
So again, look, we don't want to spoil the fun and the thrill of trading. It's absolutely not the intention here. However, there is a clear line, a silver lining between gambling and trading. And if you want to have fun with trading, then the gambling approach is for you. Like, by all means, knock yourself out, have fun. But if you want to build wealth, if you want to have long-term success, scale capital, maybe even manage other people's money, become a millionaire, then there's no way you can do it in a gambling way.
Not at all.
All right. So we have that one too. Let's stop the video.